Okay, everybody. Today I want to first talk about the S&P 500 and the overall market as it stands right now, and then I just want to take an update on the current trades in Target and McDonald's, and then we'll be out of here. First of all, I want to talk about the S&P 500 and why we should not, or at least I don't think so. Remember, I'm not licensed or anything. I'm just doing this as a hobby. So just just see this as a discussion and not advice. But this is ridiculous right now. We're way past all-time high a long time ago, and this does not reflect the how the American economy is feeling right now. I do know that interest rates are all-time low and there's nowhere else to go but into stocks. And I also know that timing a whole market like the S&P 500, a big index like that, is almost impossible. I mean, I don't know if we're going to see a flattening out right here, or if we're gonna go up 500 points until it's over. I don't know that, and I don't claim to know that, but I do know that this level does not reflect the US economy, and I also know that the stock market is a leading indicator and it does react before the actual economy. I do know all that stuff, but I don't think that we in reasonable time are gonna see the US economy this healthy to justify 2,000 points. And once the Fed starts to cut its quantitative easing and starts to maybe slowly increase interest rates in a year or so, I mean, then we're gonna see a drop down at least to the old times high of 1,500. I mean, I would probably be happy to start buying in at 1,300 or something like that. But I mean, this is just ridiculous, especially considering, I mean, I don't exactly know now where the average would be if we just pretend that this looks like an average. It could probably be okay right there. Then we're way out of the average. I assume this is average now. Sure, these are two big ones here. We have a big slope here and we have a long time slope here. So I mean, this should probably could be the average if you summarized all these points. Someone can do that math for me or pull up a graph. It'd be really appreciated. But I assume this is the median. And if let's say that is the median, then right now we're going parabolic. And I mean, that is not a good sign. We're going faster and faster up right now, and these have all the signs of a real pullback real soon. I mean, this straight line right here, that looks more extreme to me than either of these two crashes, 2007 and 2001. This looks more extreme to me. It does. I don't have mathematically calculating this, but yes, from a visual perspective, it does look pretty bad. And this is exactly the reason why I do not go in right now and take long-term positions for dividends in this market. I believe that the market is overvalued and have been overvalued for a time, at least since the whole of 2014. I believe the market has been overvalued. I mean, from around somewhere around here, 2000, around here, 1,700. Sure, I can buy that. For each increase after each recession, the American economy has tended to grow more and be bigger than before. I mean, it is. That's just the way it is. So sure, I can live with 1,700. But this is crazy. I mean, it's unbelievable, and no one seems to have a problem with it, which is even more scary. So keep an eye on that, people. And what I do meanwhile, while I wait for this pullback so I can start getting those nice dividend stocks, is to trade. not day trading. I have a job, I have school, and I know that most of us do have that, so we can't day trade, but we can swing trade or maybe trade on an intermediate scale. So I'm talking 2 weeks to 2 months, somewhere around there we can trade. And that leads me to the next subject, the Target and the McDonald's trades I have going on and how they're looking right now. This is the Target trade is going awesome. See, you can zoom in enough so everybody can see. I don't want that. Remove that. I just want to pull this over a little bit. Here, what I said before about Target going up here and hopefully taking out the gap is still holding true. I'm sneaking after with a stop loss, and I'm trying to move that up as soon as I can. I'm giving it a little bit of leeway. So I give it about 0.5% down from the previous close. But if I remember correctly here, I recommended it like right here. And if you took the advice, you probably would have gotten in at $61, something like that. And right now we're looking at 63, so we made $2 pop already, so that's nice. And I still believe that this gap's going to be closed. Gaps in bull markets are awesome. And if you'll be even more risky and even have even more fun, we can even go up to 69 here. So that's really nice. Target has nice balance sheets, and it's actually one of those stocks that is not going too parabolic. It's far from its all-time high. 2007 and of course 2013 had its best year ever. But here, this is rare to see in this, since I referring back to the S&P 500 graph I showed. This is rare to see that you have a stock that's actually kind of, not exactly. I don't even know if this is exactly. It's just my visual kind of, what I think. But this looks like it's somewhere around average and the median for the stock's life. This looks like the stock price is about the same as the growth of the actual company. Of course, you have to compare that with the actual numbers for the increase in profits and dividends with the actual stock. But I happen to know that the dividends, the revenues of Target has gone steadily up for a long time, and sure, it has, shit happens, recessions happens and stuff like that, and major hiccups happens along the way. But Target is, in essence, a very healthy stock. It has some problems, but not too much. So this is actually kind of justified, this price. It's one of the more reasonable priced stocks right now, I believe. Once again, I'm not going to buy for the long term at this price. It's ridiculous. However, I would like to trade at this price to try to cover up those gaps there. That'd be really nice. So that's something I'm looking at. And then it's going to bring back to McDonald's, which a trade I've been going on for a long while now, probably 2 or 3 weeks. Hasn't really happened a lot. I'm almost at the point where I kind of feel like maybe I should just give up. If you execute a trade, you should execute around here somewhere, maybe around here. I think I did the video around right there. So you should be after your broker fee. You should probably be, pretty much $0 either way. You probably gain as much as the broker fees or something like that. But once again, we have nice gaps to be filled, and it's a bull market. So, I'm gonna stick with this. Keeping tight stop losses. Always keep tight stop losses when you're swing trading, because you don't want to let a loss run away from you. It's very easy in a trade to think that it's gonna turn around. That's not what we're in for here. Waiting for a turnaround case is something you can do when the market is much lower, and we're buying for the long run, for get some dividends and some nice growth out of stock, but that's not what we're doing here. So pretty much, that's pretty much it. That's all I have for you guys. If you want to, as always, you're always welcome to like and subscribe to the channel, and have a wonderful day. Okay, bye bye.